We are now having a look at the outlook for equities, looking ahead with our China equity strategist, Marvin, Chen. Now, and I guess the question is, given profit delivery for the third quarter was even much worse, what does next year actually hold for us, and indeed the current quarter as well?
Yeah, despite all of the challenges China's facing at the moment, we do think there's a window of opportunity for China stocks to pick up some momentum in the first half of next year, particularly as some of the policy easing measures that we've seen over the past several months feed through to the economy and earnings. The Fed pause and potentially a pivot also allows for more China easing into next year as well. But we do think market volatility could pick up towards the middle of next year when the U.S. election cycle heats up, geopolitical tensions, U.S.-China relations may be in the spotlight again.
In terms of earnings, markets are still looking for a double-digit rebound next year. Is that realistic?
Yeah, our regression model is slightly more conservative. We're looking at between 10 to 15% earnings growth. I think a key for earnings will be inflation, and for China that means moving away from deflation back to a more normal 1 to 2% growth. Industrial profits are highly correlated with producer prices, and some price growth will give pricing power and help with margins for some of the industry leaders.
Any sectors that stand out to you as worth watching next year among the group?
Yeah, I think, tech earnings have been quite robust over the past several quarters despite the earnings recession that we've seen. And next year, we have a lot going on in the sector. We have the impact of AI. We still have large-scale buybacks going on. Alibaba's changing strategy. So there are opportunities within that. And, Pinduoduo, some of the EV makers are really benefiting from their focus on international expansion. We also think energy and utilities may still warrant attention as part of the value and yield strategies as more of a defensive play. Particularly if the volatility does pick up, we prefer these sectors over the banks because the banks may have to shoulder some of the property risk going forward.
Marvin, quick one here. We've seen foreign selling from funds. In fact, average ownership of China's stocks among the top EM funds has dropped to 5-year lows right now. Does this trend continue, or do you see finally a break in it? Given what you said before, one would expect that to perhaps stabilize at least.
Yeah, I think, we're seeing a sense of urgency from policymakers to kind of turn around this foreign investor sentiment. A lot of the money that rushed in the beginning of the year to capitalize on China's reopening has basically left over the past 6 months. So we're really left with core holdings. And as you mentioned, our analysis of the top 100 EM funds shows holdings at 5 years lows, and 74% of the funds are neutral to underweight positions.